banks are going to start limiting their exposure to the equity markets after the latest news that we just got from First Republic Bank is indicating that JP Morgan, firms such as Wells Fargo and Citi and Bank of America are going to lose potentially all of their money they deposited in First Republic that totaled $30 billion just a month ago. You are starting to see full-blown capitulation in the stock market here today and really in the banking sector. And the Fed just gave us an update. So we're going to get into what's currently happening today. We're going to talk the markets. We're going to talk about this banking crisis that you are seeing evolve here today. But I also want to talk about AMC and a relationship here between banks pulling back credit and what could potentially bring about margin calls. So we have a lot to unpack. It's been a wild day. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you have not already, I don't know what in the world you are waiting for. Number one, let's get into it. FRC, First Republic Bank. This is a problem child of the banking sector, and it's really the bank's fault. They could have let this thing fail when SVB and Signature failed, but they did not. Firms such as JP Morgan, Citi, Bank of America, Wells Fargo all deposited $5 billion. Smaller firms, but still large firms like Goldman Sachs and Morgan Stanley deposited $2.5 billion into First Republic Bank. And smaller firms such as M&T Bank and Capital One, as well as Truist, deposited $1 billion apiece into First Republic Bank about a month ago. And I'm sure you guys recall that. Now, these banks pledged to keep their collateral, or to keep essentially collateral in FRC to keep them going, but their deposits in this bank for at least 90 days. That is written in a contract. Now, why the markets are really in full-blown capitulation mode today, especially in the banking sector? Well, number one, FRC dropped about 50% yesterday, and now it's down about 33% here today. Now, couple reasons why that is. Right here. Number one, First Republic, their stock falls 30% as the bank looks for a rescue deal. They essentially came out today and said, we need to make a deal. We need to figure something out here because it's a problem. Long story short, I'll save you the details of really which you don't need to know as much. FRC, they started to bounce after this. That wasn't a huge deal. I mean, it was a bad sign, but the stock was only down about 10% at one point today. This is the news that I want to focus on, and this is what is going to get essentially people and banks to really buckle down on their credit, to try to limit potential fallout from an FRC collapse. Now, earlier in the day today, the government said they're not going to backstop any deposits. They don't want basically anything to do with this. They're not going to broker a deal for FRC. Now, the news that just came out is that the Fed is considering limiting exposure of FRC to the lending program that they just recently opened for troubled banks. This is another sign that FRC is about to go bust, and that has other implications for larger banks now. I mean, JP Morgan and these other banks, right, that deposited money into FRC, yeah, I'm sure they had exposure. I'm sure they had investments in FRC. I'm sure they did business together, but now they're literally standing to lose $5 billion apiece, $2.5 billion to Morgan Stanley and Goldman Sachs, $1 billion to Capital One, Truist, and M&T Bank. That's a problem. Not even considering the other potential fallout that could be behind the scenes. So that's the problem today, and that's why the markets are freaking out, and that is what has caused so many halts in FRC stock today. Now, how does this play into potential margin calls? Well, you could look at this as a forced share recalls. You could look at this as margin calls. Doesn't matter which way you want to look at it. But banks, especially these banks that are taking losses right now, are going to try to bring in as much capital as possible and really buckle down their balance sheets. So in a worst case scenario, the Fed keeps raising rates, the economy goes in the toilet, investors start pulling their funds into money mutual funds, well, the banks will be okay. They'll still survive because after all, this is a capitalistic world. The last thing JP Morgan, Morgan Stanley, Citi, or Bank of America want is to see their stocks come to a similar fate as FRC based off of the fact that they're not buckling down as much. Now, you got to think of liquid and illiquid assets here because some things you just cannot get your money back quickly. Something like real estate is not liquid. I mean, you could sell it, but you can't sell it right now if you wanted to. You got to go out, find a buyer, you got to list it, right? That's an illiquid asset. Trust me, I own a couple rental properties. They're illiquid assets. If you want to sell it, depending on what market you're in, it's going to take 30 to 90 days, if not longer if you're trying to tax people, right? Well, something like stocks and margin loans, especially to hedge funds. I'm not talking about you guys. If you have margin outstanding, that's not what I'm talking about. They don't care about your $5,000 or $10,000 in your brokerage account or whatever dollar amount it is. But when you're talking hundreds of millions of dollars that are lent out with this bank, with this firm, with that firm, with this firm, you get the idea? That's where it could be a problem because there's a lot of people that are over leveraged here in this market. Just look at technology as a whole. It's in a damn bubble, right? Facebook went from trading at 13 times earnings. Now it's at 28 times earnings in 3 months. That's very much bubblicious. And the firms and people that are behind that are the ones that I think the big guys at least would be in the crossfire of seeing some of those forced loan recalls. Really, that's probably the best word I would put on it. Forced loan recalls. And it all comes down to buckling down the hatches. And we've seen this. We've seen this data coming. Just last week's data was the worst lending data that you have seen in 3 years since pre-COVID levels. And really, it was only better than pre-COVID levels a little bit. A couple periods in 2018, 2019. Other than that, it's bad. People are not lending out that much money right now. The velocity of money as well is massively deteriorating in a way that you just can't make this up. So, and go ahead and fact check me if you guys want to. I don't want to spend 25 minutes on this video and this topic because I do want to get into AMC as well and talk the implications. But all of those things are true. Lending volume has dramatically been reduced. The velocity of money is dramatically getting reduced. It looks like even as soon as today and after hours, you could get an announcement that the FDIC is taking over First Republic. And these banks are going to lose billions of dollars a piece, billions a piece. Archegos caused JP Morgan to lose billions of dollars. What was it? Credit Suisse to lose billions of dollars. And look at the reactions you had based off of that alone. It wasn't pretty. And this is not going to be pretty as well. Things are rapidly deteriorating, and this stock really is just nonstop been halted all day long. So this is the major story of the day today, and something I think will give you forced loan recalls. I don't really think there is another alternative here. Now, do we see this on a mass scale where most hedge fund loans are recalled? Maybe, but probably not. FRC would have to go bust, and then you'd have to start seeing contagion in other banks. And then you get more of a whole industry-wide recall. But the firms that are the weakest, meaning if you guys watched the video from earlier, that pyramid example I gave where you got big firms on top, that are like hundreds of billion or like $80 billion of assets plus on the top. You got your mid-tier funds that are like 15 billion to 50 billion in funds in assets under management. And then you got your small guys that are like 1 to 10 billion or 1 to 15 billion in assets under management. Those small guys, those mid guys, yeah, they're likely getting their loans recalled. Likely. Those bigger guys, they have enough capital. I'm sure they would do okay. Now, the thing with AMC is if one guy starts to cover to get their collateral back, or they need to because the bank's asking for it back, well, you could see how small shorts that do start to cover because they have to cover. And it might not just be on AMC. Keep this in mind. It might be on a lot of other names as well. You might start to see these small cap stocks actually outperforming as they have been the main punching bag for the stock market for a while. These shorts have been just shorting the absolute shit out of these small and mid cap stocks. You might see AMC benefit quite a bit from that. On top of the other tailwinds we have, like positive court news that we just got April 25th, as well as an expected positive earnings coming on April 5th. So there's even people talking about a black swan event coming tomorrow. Like the stock market could crash 5 to 7% tomorrow. You're starting to hear people talk about that. And I have not heard anything about a black swan event at all. So that's why it's pretty important what I'm saying. Now, this might take some time, right? It might not happen tomorrow. It might take some time. But the direction we're going in does not look pretty. Not at all. So there's kind of the relationship between banks, hedge funds, and these small and mid cap stocks, right? It's not just AMC. AMC would likely be a big beneficiary because we know there's a lot of leverage happening with AMC, and we know probably the short interest is higher than what we get reported on. So it could be a big benefit to AMC. Could be. It just depends. If we get a black swan event, everything probably goes down in that event. So there you have that. That's the big story of the day. Today in after hours, you're also on top of any news you get from the banking sector. You're going to have earnings with Facebook, Roku, ServiceNow, and Teladoc. Those are going to be the big guys that markets really want to pay attention to, that could move the markets, especially Meta and Roku, because that's kind of one. Roku, your consumer demand. Like, are they selling more units? Are people connecting to those units? Is their advertising working? Same thing with Facebook as well. Or was Alphabet just the outlier there? We'll get some more clarity here in after hours on that today because they will give us their earnings report. Now, if we go ahead and pull up AMC stock, and you guys kind of got me going there. A lot to say in the banking crisis. AMC stock is flat on the day. I think this is kind of showing you as well that they don't necessarily have to fall. AMC doesn't necessarily have to fall if the markets are falling, if people are capitulating. And I say capitulation because Goldman Sachs, JP Morgan, I mean, they're all down so much today. JP Morgan being down 2.5%, Goldman down 3 to 4%. It's pretty rough out there. It's pretty bad across the board. So yeah, looks like some capitulation. Now, AMC, like I said, flat on the day. AMC does not have to fall when the markets fall, and that is a positive thing. That reinforces a lot of the bullish thesis that I have currently on AMC stock. Now, the live short interest of free float, 26.13%, 135 million shares currently sold short in AMC stock. Cost to borrow average, 349.25%. Cost to borrow max, 363.83%. Cost to borrow minimum, 328.53%. Interactive brokers short availability is at about 250,000 shares currently available to be lent out. Cost to borrow rate at about 210%. Now, option activity on the day, no surprise here. Lots of leverage with AMC. In any way they can get it, whether it's shorting the stock, whether it's options. Hedge funds take full advantage of all of it, and you're seeing that prevalent today. 14 orders totaling $1.55 million, positive order value of 0%. And this figure right here makes me very bullish on AMC as well, because all these firms are so negative. In the past week, you have seen 356 orders on AMC Stock, totaling $136 million with a positive order value of 4. Meaning that out of, call it 100 options that are placed on AMC in the past week, 4 of them were bullish and 96 of them were bearish. That makes me bullish. I don't want to be, bearish when everyone's bearish. I don't want to be bullish when everyone's bullish. I think that in and of itself is a positive thing. Now, we'll see how the banking crisis does transpire in after hours here today. If we're going to get news, it's going to be in after hours, as well as earnings. Those are really going to be the things that guide and dictate this market and where we are going to go from here. So forced loan recalls look likely here as these banks are straight up about to take billions of dollars in losses. It looks inevitable that is going to happen at the very least. That will buckle down lending standards. That will cause some loans to be recalled. Not the same as you and me. Keep in mind, bank's not going to ask for your house back because that's a fixed asset. You can't do that. But the terms that hedge funds get and money managers get with banks is not favorable. It's not like you going out and getting a loan. There's certain protections and disclosures that you have to sign that says your loan cannot be recalled on you for no reason. Now, if you get a bridge loan in real estate, there's different disclaimers there. You're getting a bridge loan. It can be recalled at any time. Famously, Dave Ramsey, that's why he went bankrupt in his 20s, because his bridge loans were recalled by the bank when financial stress was in the system. But with hedge funds and money managers, sometimes they only get a 12-hour notice to give the banks their monies back. Sometimes a couple days, but it can get pretty dramatic. So we'll see what happens. Let me know down below in the comment section, what do you guys think about this information? What is your estimate and thoughts about this situation? Let me just tell you as well, technicals on the S&P 500 are looking quite nasty right here today. Ladies and gentlemen, thank you guys for watching. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys also want to come trade with me live in real time, link down below in the description of this video. We have made a lot of trades free today, made a lot of trades in general, made a lot of them free, made a lot of profits on some of them, riding some more into earnings in after hours. So you guys enjoy the rest of your day, and I will see you in the next one.